Hi guys, good morning and welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Not a pretty picture. In fact, it is looking fairly scary if you look at the screens at the current juncture. The GIFT Nifty, the sell-off has only exacerbated a 950 point cut on the GIFT Nifty as we speak. The US futures are taking a tumble. Remember, we saw a big crash on Wall Street on Friday, a second straight day of sell-off on Wall Street, wherein the Dow plummeted over 2200 points. So, for the Dow, two straight sessions of 1500 point or more kind of a cut, that's something that has happened for the first time. In fact, a lot of experts are predicting a Black Monday crash for today. Let's hope that doesn't happen, but the futures are, kind of veering towards that, that it could be Black Monday 2.0 when it comes to Wall Street. Asian markets have also opened the week rather with a very dismal picture coming out from there as well. The Hang Seng was down 9%. Nikkei slumps to an 18-month low. Kospi, deep cuts 5% and above. So yes, Shanghai as well and Hang Seng, all these markets, feeling the heat, and the Trump tariff, induced sell-off is only worsening. But yes, we will be watching out for the market open. A 950 point cut on the GIFT Nifty, so not looking like we will start the week on a positive note. But what should one really do? How should one navigate this sell-off? Are we at the end point of the kind of sell-off that we have seen, or are we in the middle of it? Where are we, and how should you really position yourself? Now we'll get you an expert view on that. We'll try and help you navigate this leg of the sell-off. Of course, your stock related queries will also be in focus. Keep them coming in, and remember, it is going to be an important week in terms of domestic cues as well. The MPC meeting is starting off today, and the outcome will come out on Wednesday. Chances are that the RBI will cut rates by another 25 basis points, and of course we kickstart our earnings season as well, with TCS slated to report numbers on the 10th. On that note, before we move any further and get on board our guests for the day, let me quickly take you through the top headlines at this hour. US futures under pressure after indices posted their worst day ever on Friday since 2020, in fact, as China announced retaliatory tariffs escalating a global trade war. The Dow ends in correction, slipping over 2200 points, while the S&P and Nasdaq ended lower by nearly 6% each. The 10-year treasury yield sees the biggest weekly drop in 8 months. Asian markets see another day of deep cuts as Trump tariffs ignite fears of a recession. The Nikkei trades with sharp cuts of 6% or so, while the GIFT Nifty is indicating a big gap down for our markets. Of course, as I mentioned, a 950 point cut at the current juncture on the GIFT Nifty. The sell-off has also extended to the commodities markets. You had oil prices extend losses on fears that a global trade war could slow the economy down. US oil prices, or WTI crude, fell below $60 a barrel, while Brent slipped over 3%. In fact, it did test that $65 per barrel mark. Gold, meanwhile, also slipped from record highs following the equity market rout. And even as global leaders criticize Trump's tariffs, White House Economic Council Director Kevin Hassett defends Trump's tariffs, says more than 50 countries have reached out to the president to begin negotiations. Meanwhile, the Indian government has indicated that it won't take retaliatory action against the US and will continue negotiating a bilateral trade deal. And the 3-day monetary policy meeting of the RBI begins today, with the central bank set to announce its decision on Wednesday. The RBI is expected to cut repo rates by another 25 basis points as global growth is likely to be pulled down by the tariff war. Of course, let's take a look at the cues for trade then. Of course, when it comes to the tariff scenario, Trump's top economic officials have said that tariffs will persist whatever the markets may do. In fact, speaking on the, sell-off that the markets have seen, Trump has also said that it is just, a medicine. Sometimes you have to take medicine, although he's not really, wanting for the stock market to go down. But of course, he said that, of course, you have to take medicine, and he's in fact also said that tariffs are beautiful. But of course, there are fears of a full-blown trade war, given the fact that China has imposed 34% tariff on US imports starting 10th of April. But if you see what's happening, several countries, as White House has indicated that 50 countries or as many as 50 countries have approached Trump for discussions when it comes to the trade, the tariffs, right? So and of course the president has also hinted that he's had conversations with Vietnam as well. So looks like, if there are some positive headlines coming out on that front, we could see some bit of improvement in the market texture as well. So yes, of course, a lot of experts are also of the view that Trump is using tariff as a negotiating tool, but Trump has of course said that the tariffs will persist throughout his tenure. So how the situation really pans out, the market will be hinging on that. But if you look at the market cues, the domestic market cues, talking about the weekly action, the Nifty has given up 50% of the recovery that it has seen from the 4th of March. The lows were 21,964, and today with the kind of open that we are staring at, we could test those 22,000 levels on the downside as well. Talking about the weekly roundup, both the Sensex and Nifty fell somewhere around 3%. The mid-cap index, however, the fall was lesser compared to the benchmarks, 2% cut for the Nifty mid-cap index for the last week. The Nifty Bank relatively outperformed. It was down, but less than 0.5%. So that's one pocket that has withstood the headlines when it comes to Trump tariffs. IT index, not such great luck for this index. It has recorded its biggest weekly fall since COVID. The index was down 9% on a weekly basis. Of course, there are fears of a recession, and that could weigh on discretionary spending and in turn could impact IT names. Except FMCG, all the sectoral indices ended the week in the red. 36 Nifty stocks gave negative returns, and 14 stocks were down over 5% or more for the week. Hindalco, HCL Tech, Tata Motors, Tata Steel, TCS, ONGC, these were just some of the names that were among the top laggards on the Nifty. Talking about Friday in particular, we did test the 22,900 mark, but today, given the fact that the GIFT Nifty is trading with cuts of over 900 points, 22,000, we'll have to see whether we manage to defend that level on the downside or not. And 21,964, that's the level that I mentioned, March lows, whether that will be tested or not, that's something that market participants will be really watching out for. There was a big pain in the broader market on Friday. The mid-cap index was down 3%. In fact, BSE listed companies erased market cap of 11 lakh crores on Friday. For the US as well, $5 trillion in market cap was shaved off on Friday from S&P 500 companies. The market breadth on Friday firmly in favor of declines. Of course, no points to guess. Market breadth was very, very poor. NSE advanced decline ratio was at 1:4. And of course, it was the commentary on the pharma tariff, which the market had thought will be exempt from tariffs. No such luck. Trump has said that you could see tariffs, never seen before tariffs on pharma. That's something that weighed heavy on the sector on Friday, which did well on Thursday but gave up all the gains. In fact, took a sharp U-turn in Friday's session. The pharma pack was down 4%. Of course, autos were also under pressure. Tata Motors, Motherson, Bharat Forge, these were among the top laggards, and Tata Motors will be in focus today as well, as they are stopping their JLR shipments to US for 1 month. We'll be talking about that stock later on the show. Metal stocks, saw a big fall in the wake of, slowdown fears. In fact, stocks saw cuts of anywhere between 5 to 9%. Crude, in fact, that deserves mention. That slipped to a 4-year low. In fact, Brent, as we speak, around that $65 per barrel mark. It dragged upstream oil companies like ONGC, Oil India. All these stocks were down somewhere around 7 to 8%. But what managed to hold out in a weak market were stocks like HDFC Bank and Bajaj Finance. They came up with healthy fourth quarter updates, and because of that, we saw some bit of green on the screen when it comes to these particular stocks. The put call ratio on the Nifty dropped to 0.74 sharply vis-a-vis 1.12 in the previous session. Let's also talk about the stocks that will be in futures and options ban for today. There are two additions, Birla Soft and Hindustan Copper. Talking about the fund flows as well. FIIs had turned buyers for a brief period. But of course, they once again turned sellers. In fact, they have withdrawn somewhere around 10,000 crore rupees from the Wall Street in a matter of 4 days. For Friday in particular, the net sell figure was at 3,400 crore rupees. The DIIs, or domestic institutional investors, were also net sellers on Friday, and they sold stocks worth somewhere around 1,700 crore rupees in the cash market. But on that note, let's see whether we have our guest for today. Joining me is Rajesh Palviya, Senior VP, Research Head, Technical and Derivatives at Axis Securities. Rajesh, I don't know what to say. It's looking horrendous. If you look at the screen, 950 point cut on the GIFT Nifty. Do you think 22,000 will hold today? What are the levels you're working with on the downside when it comes to the headline index?
Good morning, Nandita. So I think it's difficult to hold 22,000 level, though global markets are in very bad shape, and the kind of fear across the globe is mounting because of this trade tariff uncertainty. What exactly going to happen on the trade side across the globe? I think this uncertainty will give more pressure on the market because if we are opening around 22,000 level, a lot of margin call would trigger in the opening itself, because it's a 5% kind of cut in the opening itself will trigger these kind of supply pressure in the market. And I think first half an hour would be very crucial, and I thought a lot of unwinding action we may witness in the opening itself. So I think we may slip below to 22,000 level also, and I think we may retest the previous swing low of March around 21,800 kind of zone. So that's the next level where Nifty can go further down. I think 21,800 would be very crucial to watch for in this gap down opening. If we're not able to defend that level, then I think another round of sell-off we may see in the coming days also. So at this juncture, 21,800 is the area where Nifty will try to get some buying action, but I think it's again very difficult. We have to wait and watch after the opening how the next 10 minutes after the opening would play out in the market. Yes, on the Bank Nifty, there is still outperformance, but I think in this gap down, Bank Nifty is also likely to open around 50,000 or maybe below 50,000 kind of level. If it's breaks below 50,000, then we may see follow-up selling in the
Right.
Bank Nifty also. Further more sell-off could be there.
Okay. So, okay, that's the view. And yes, the first ticks are coming in. And of course, it's a 1,000-point cut on the Nifty. We slipped below that 21,900. In fact, we opened below that level. Right now, we are around the 21,900 mark. So, of course, 22,000 has been violated. That was expected. The Sensex is down 3,000 points as we speak. The mid-cap index, 2,600 point cut, it's down over 5%. In fact, the Bank Nifty that we were talking about, it's down almost 3%. So yes, it's dismal to say the least. If you look at the advance decline ratio, 43 advances to 1,923 declines. That's the kind of weakness that's coming in when it comes to the broader end of the market. So I want to quickly see what some of the sectors are doing, because Bank Nifty, as I mentioned, a 3% cut, and that index, by the way, had outperformed if you compare it with the other pockets in the market. Right now, Auto Pack down 6%, you have IT down another 6.5%, metal, that's the big laggard, 8.5% cut on the Nifty metal index. So across the board, the cuts range anywhere between 5% to 8% or even more. In fact, the metal index is down almost 9 now. Across the board weakness, I'm sure if you look at the Nifty, movers, you will hardly find any gainers today. Let's take stock of the top laggards then. Trent is the big one, a 10% cut. Metal names, of course, as I mentioned, the Nifty metal index is down almost 9%. So GSW Steel, Tata Steel, Hindalco, all these stocks are down 8 to 10%. You have Infosys, Tech Mahindra, HCL Tech, the IT names almost 6 to 9%. Across the board sell off, two-wheelers, financials, autos, across the board sell off. So yes, manic Monday to say the least, but that hardly captures the sentiment that is there in the market. Bharti Airtel is the sole gainer at the current juncture. 0.6% kind of gain. That's the only gainer as of now. But let's take a look at some of the mid cap movers as well. I want to see which are the stocks that are taking the biggest hit when it comes to the broader end of the markets as well. So Nifty 500, let me go through what some of the movers are over there. Siemens, I don't know if there's a corporate action or something, that stock is down 41%. Zensar Tech down 13%, Chola Financial 11%, PTC Industries down 10%, Graphite India down 10%. Avanti Feeds, of course, some of these names, the shrimp names, had already seen quite a bit of a badgering after the tariff announcement, continues to sell off. Reddington is the other one, 10.5% cut there. But, in terms of some of the gainers, then I want to just see if there are any. I can hardly spot any movers on the gaining front. But Rajesh, what would you do for the day today? Of course, it is an across the board sell off. All the sectors are selling off. No place to hide. How would you approach the market today?
Well, I think after this, sharp gap down, I think the activity would be more on the, risk management part from the trader as well as from the investor also, because fear is very high on the street and still uncertainty is there. So I think first half an hour of this trade would be to adjust the position, and wherever they have to cut down the losses or trim down their position, that kind of activity is going to happen. So I think it's very difficult to take any call on the stock specific also, because we don't know where the supply pressure will come because of this risk management activity. So I think one should wait and watch till this supply pressure settle down at certain level. So I think first 15-20 minutes is going to be very crucial. So I think one should avoid to buy at this juncture. Try to minimize the risk. If you are sitting on some of the sector like IT or metal, you should try to trim down the position, because here these two sectors are clearly in the bearish mode in terms of technical, as well as the news flow, as well as the concerns for these sectors are still on the weaker side. So I think we may see further more pain in the IT as well as in the metal. So these two sectors are clearly avoid. Only once the market settle down, try to focus on the consumption related, domestic consumption related stock from the FMCG basket or from the banking space or NBFC. These three sectors can be looked at, but not at this point. Let the market to settle down, because the first 30 minutes is likely to be on the margin pressure. The supply would be intense in terms of volatility.
Okay, that's the view then. Of course, first half an hour, you will have to wait for the markets to adjust, for the supply pressure to settle down really. But let's break it down to individual stocks as well. I know it's not a day to really single out stocks because everything is selling off. But some of these newsmakers, we must touch upon them as well. Starting with a lot of queries coming in, of course, no points for guessing, because nobody really knows what to do in such a market. Naveen has written in, wants to know your thoughts, particularly for the IT sector. Of course, you mentioned that it is a complete avoid at the current juncture. But if somebody has some holdings, if somebody has positions for the likes of Infosys in particular, how would you advise them to navigate?
The structure is very weak for Infosys, and the concerns are US recession, and I think the way US and Europe economy is shaping up, I think there would be concern, and then the discretionary spending will cut down, and that will be directly giving the impact to the IT stocks. So I think the kind of fall which we have witnessed for Infosys, even if I analyze on the longer term time frame, I think for this calendar year, almost 30% cut we have already seen for Infosys, and on the monthly chart, stock is now trading near to very critical support area of May 2023. So I think if it's break below 1300 mark, I think furthermore round of selling towards 1260 would be there. As you are already invested in this stock, your horizon is for little longer period, then you can hold on, because Maybe after this sell-off, some recovery would be there. But I think again we have to review the situation, how the global market shapes up, what kind of concerns US economy is going to have in the near term as well as in the short term basis. So that will be the key trigger for all these IT stocks. At this juncture, 1300 is the critical support. So if it's break, then I think another round of selling towards 1250 would be there. But I think we have already corrected 30% for this stock, Infosys. So I think stock may try to get some buying interest around those level, but in pullback, 1400 would be the major supply zone. So again, you should review it again. So you have to monitor what kind of global situation is emerging, especially in the on the US front.
Okay, that's the view on Infosys. But trend, what's happening here? 15% cut, 4,728. Your thoughts? Is this a fresh leg of sell-off? Because the stock has been witnessing sell-off, right from the start of the year. But, do you think there is more to go before it enters the oversold zone?
The kind of opening 15% cut in opening itself is really very big cut for the stock, and now stock is almost reached to the level of March 2025 low, swing low. And I think if it's breaks below 4700, another cut towards 4500 we may see in very short period of time. So structure is weak for trend. Stock has now broken down all its near term short term support area. Avoid at this juncture. I think stock may go down further towards 4500 also.
4,500 on the lower level on a trend. But let's talk about another Tata Group stock, Tata Motors. Of course, the stock was down 10% in the last 5 sessions, but with today's move of an 8% cut, the stock is down almost 20%. If you look at the movement since last to last Friday. There is news flow. The company will be pausing shipments to US in the month of April, of course this month in the wake of the tariffs. CLSA of course has removed the stock from its high conviction list. It believes that the US tariff will result in a 26% volume decline for the company. Remember, in 2024, US formed more than 30% of JLR sales. A tariff of course is set to rise to 25% from just 2.5%. Morgan Stanley is also of the view that if the auto tariffs remain, JLR could again go free cash flow negative, and that will be a big negative for the stock as well, right? Because the stock or the company has been grappling with weak free cash flows, with the slowdown in India as well. And, Morgan Stanley in fact says that the stock could in fact retest bear case scenario, bear case levels of 416. Right now, where is Tata Motors? It's at 563. Do you think 500 levels, would be taken out anytime soon now, because the stock is in a free fall?
Nandita, it's a clear, impact of global linkages of the business, and Tata Motor is more majorly dependent on the global, markets. So I think the same kind of impact is there as a concern from the US, Europe, China, everywhere. There is a concern. So I think the price hit is already done in the stock. Looking at the near term, short term structure, yes, if it's sustained below the 570, 580 zone, I think there could be the more downside towards 540, even 520 zone in the continuation of this down move. Stock is in oversold trajectory, but I think if it's remain below 580, we may see lower level towards 520, 540.
Okay, 525, 540 on the lower level to watch out for on a Tata Motors. But IndusInd Bank was one stock that managed to see some bit of green if you look at the weekly performance. But of course, the fourth quarter business update isn't very encouraging. In fact, if you look at the CASA ratio for the bank, it's the lowest in 10 years. So not really encouraging. The stock is down 4%, although the fall is much lesser compared to the other names like Tata Motors and some of the other metal names, etc. But IndusInd Bank, do you think it's already in oversold zone? And do you think here on the fall will be a little measured, because the company or the stock really reacted to the corporate developments at the bank? So here on, for an IndusInd Bank, would you stick your neck out and say that buy at lower levels?
No, still concerns are there, and I think structure is still weak. Stock is still trading below the 20-day moving average. So I think I'll wait until the stock not crosses above 700 mark. I think this pullback will also meet to the supply pressure. Once the stock crosses and stabilize above 700 705 level, then some short covering action we may see in the counter, and then pullback can extend to 750 zone. But at this juncture, I think I still wait and watch would be there for from my side for IndusInd Bank.
Okay, that's about an IndusInd Bank. But let's shift focus to some viewer queries then. Quite a few trickling in, and I think it would be prudent to take some of them. I want to take up a query on one of the metal stocks because metals have been witnessing extreme selling pressure. Even on Friday, we had names which saw cuts of 5 to 9%, and today as well. Biggest sectoral laggard, I think it's over 9% now. Ashish Goyal has written in, wants to know if it's time to buy into a Hindalco. Would you be brave enough to take a bet on these or on any of these metal stocks, a positional play? Of course, we have concerns of a US recession, growth slowdown, and that would, of course, impact metals. So, metals now, how to approach, and Hindalco in particular?
So during the month itself, stock has corrected almost 19%, and now stock is negotiating with its upsloping trend line on the monthly chart. I think if it's remain below to 570, we may see pressure to extend on the downside, and then possible down move can extend towards 540, even 530 zone also. Though long-term chart are still bullish for the stock. So I think if you have a little longer horizon, buy and decline. 540, 530 would be the next level where you can try to buy some quantity, but buy in a staggered manner because still uncertainty is there. And I think the kind of tax again, China has imposed. I think metal could be again volatile in this kind of scenario. So in decline, you can use opportunity. 520, 530 would be the level where you can buy some little quantity.
Okay, that's the view on Hindalco. If you have a longer time horizon, then on declines, it is a good good thing, or rather, it will be a prudent thing to do to buy into the stock. But let's take stock of some of the other queries that are trickling in. Then Shweta Naidu has a query on CG Power. Her buy price is 612. She wants to know if she should add more at the current levels. What would you suggest here, Rajesh?
I think she can add, but wait for today's session at least. How the markets close today, or how the first half turns out. Whether we have furthermore follow-up selling. So I think you may get further lower level. On the technical front, the major support on the near-term perspective is placed at 520 level, and almost in the opening itself we have tested those level. So 520 is the key level to watch for. If you are buying for average, your stop loss should be at around 517, which is the today's low. And in the pullback, I think whatever quantity you are buying for averaging out, you can book profits around 600, because 600 is the key resistance area. So if pullback continues, 600 would be the next level on the higher side. So keep your stop loss around 517.
Okay, that's the view on CG Power. Hope that answers your query, Shweta. By the way, some loss, we've managed to cut some losses. Nothing really to write home about, but we are above that 22,100 mark now. Sell-off, is kind of settling down now, as you had mentioned, Rajesh, that wait it out for the first half an hour and wait for the supply pressure to ease. So yes, a 750 point cut on the Nifty now as we speak. We've recovered some lost ground, 22,150. Let's see. Let's hope that this the slight recovery that we have seen from opening lows only gets better going forward. The metal index as well, now down just about 6.5% or so. Remember, at the open it was down somewhere around 9%. Pharma pack, 2.5% cut. What will you do with the pharma shares now? It saw good traction given the fact that many believe that it has been spared from tariffs, but of course, Trump's comments that you may see or you will see never seen before kind of tariff on pharma, that of course led to a sharp sell-off on some of the pharma names. Today as well, there is weakness, but it is lesser compared to other sectors. Would you look at pharma, or would you adopt a wait and watch approach here as well?
But again, after the statement of Trump, there is again, sell-off in the pharma stocks. Most of the stocks have adjusted. What could be the impact, if at all, any, tariff imposed on the pharma sector also. So I think we have seen, most of the pharma stocks have corrected in the previous day also. But still uncertainty is there. What kind of tariff would be there? So I think the final reaction would be there after the announcement. But looking at the overall scenario on the long-term perspective, I think Lupin would be the stock where we can focus. If you get opportunity to buy this stock around 1800 or 1850 kind of zone, that's the good level to buy the stock. So don't buy in a big quantity. Only buy in a very thin quantity, because it's still we don't know what kind of announcement going to come. So that may give impact to the pharma space also. So I think if you want to buy a stock and want to use this decline as a buying opportunity, so Lupin would be our first choice. Another stock that we like from the pharma space, that is Sun Pharma. Here also you can keep stock on your buying radar. On the downside, the 1600, 1580 would be the level. If you get those levels, that would be the important level to watch or buy the stock in a staggered manner.
Okay, that's the view on pharma, but some of the queries I want to quickly squeeze in before we get on board our fundamental guest. Any thoughts on Voltas? Pannu Anil wants to know your thoughts. Of course, we are staring at a very hot summer season. Would you take a bet on some of these stocks, domestic focused, the likes of Voltas, Blue Star, anything on your radar?
Voltas is in oversold trajectory. Technical structure is still weak, but stock is trading near to the crucial support area of 1200, 1220 level, which is the crucial support for the stock in this decline. So I think if you want to buy for little positional perspective, buy in staggered manner, keep your stop loss around 1200. If it manages to hold about 1200 level, I think some pullback towards 1350, 1340 we may see in the near term to short term perspective, but don't buy at current level. Wait for some decline to buy this stock. And I think in another stock you mentioned about Blue Star or Havels is also we can look at, because again Havels is also near to its important support area of 1390. So you can buy this stock also in decline with stop loss of 1380. In the pullback, maybe we can see level of 1460 to 1480. So where you can book profits also. Still, structure is weak. So we can take some contra bet ahead of demand, which could give impact to their numbers going forward. So that could be one call we can take in this Havels, Voltas, or Blue Star kind of stock.
Sure. Last couple of questions really, Rajesh. I want to take up this query, from Satya CK. He wants to know, under this scenario, is it better to add US index stocks or mutual funds, that have exposure to US stocks? If yes, anything that you would suggest if you track?
Okay, can you come again?
Any US index stocks that could be added in this scenario?
No, we don't track
any mutual funds that have exposure to US. You don't track. No
Yeah,
worries, no worries.
yeah.
Sure, Rajesh. Just one last query then. I think I missed it out. It was to do with healthcare and pharma. Nitin Shaji wants to know what he should be doing with three of his holdings. In fact, he has shares of Supriya Life, Bajaj Healthcare and Aeroflex as well. He is holding all three with a loss of 10% or so. Any view on these stocks and how he should navigate now?
I think he may hold on. Let's this supply pressure settle down, I think 10% cut, I think can be, recover once the market start recovering. So Supriya Life is still, trading near to its important support area of 600, 640 kind of zone. So I think if it manages to defend this level, we may see recovery in this stock. And again, I think the consolidation is going on since last 4 5 months. So on the higher side, 750 is the crucial level. If it crosses, then I think we may see continuation of up move. So stock is in over, bullish trajectory. Some pressure is there because of market is volatile. Bajaj Healthcare has broken 100-day moving average, but still, if we analyze on the longer term time frame, stock is holding its long term support area of 500. If it's managed to defend this 500 level, I think here also we may see recovery. And in recovery, 600 would be the crucial level to watch for on the high side. If it crosses, then I think trend will resume on the upward side for Bajaj Healthcare also.
Okay, that's the view then. I hope that answers your query. And with that, we've come to the end of the query segment. Rajesh, before I let you go, what would you be doing with this, in this market? Would you recommend anything, or would you say hold your fire for the next 2 3 days?
So I think Nandita, one should focus on the banking stocks where we are still, hope that here this space can, show some outperformance. Though there would be volatility, but I think Federal Bank is looking interesting. The way stock is absorbing all the volatility and sustaining above 190 level. So I think here there could be opportunity once stock market stabilize. I think 210 to 215 would be the next target for Federal Bank. So one can focus on this stock with stop loss of 185. Another stock that we like, which is, will get the benefit from the crude fall. So I think Indigo can be looked at as long-term structure for Indigo is bullish, and I think today we have seen around 4% kind of cut in the stock. But from lower level, there is a smart recovery in this stock. So Indigo can be looked at for upside target of 5,050 to 5,100. Your stop loss should be placed at around 4750.
Okay, still some stocks that you can look at, and those are the recommendations coming in from Rajesh. With that, Rajesh, would like to thank you for taking out time and joining in. Always a pleasure, and I hope next time we chat, the sentiment would be a little better than what it is right now. Thank you, and have a great day. Well, on that note, quickly take a look at what's happening now. Have we managed to cut some losses? Yes, I mean, we are above that 22,000 mark, just about holding on to that level or clutching on to that level, so to say. It's an 880 point cut on the index, a 2700 point cut on the Sensex. Mind you, the kind of fall that we saw at the start, that's the worst, I think, open since June 4th, 2024. On the mid cap index as well, it was down somewhere around 5% or above at the open. Now we are down somewhere around 4% or so. The VIX volatility has spiked, and how I think it's above that 20 level now as we speak. But on that note, to understand what should one really do, where should one hide, are we at the fag end of the sell off or are we in the middle of it? To put everything into perspective, we are joined by Daljit Singh Kohli, head equity at Roha Asset Managers. Daljit, lovely having you on the show, but looking at the screens, you get a sense of deja vu, because a lot of people are talking about Black Monday 2.0 today when Wall Street reopens for trade in the night. What are your thoughts? Are we in the middle of the sell-off, or where are we at the current juncture?
Yeah. Good morning. Thanks for having me on your show. See, I think the world order is changing. No? With one man's fancies, we are seeing throughout the world the way the trade is being done, the way we have seen for last 50 years, 70 years, all those things are coming into a transformation. Now, this big transformation cannot happen in one day, one night, and therefore it is going to be, I think, a little bit of long duration when we will see these things settle down. So this transition phase will be definitely, and whenever there is a transition, we have always seen that there is a lot of pain there. Philosophically saying that if you buy in these painful periods, over a period of 5 years, 10 years, you will always be in the best shape. No? In fact, maximum returns are made whenever these kind of things happen. No, any history tells us any time, any event you pick up, you will find that after 4 or 5 years, actually that was the best period. But the point is that at that spur of the moment, what do you do? Do you have that much money? Do you have that patience? Do you have that mindset to do those things? No? So I think this is the time when patience will be tested. This is the place where your conviction on your stock idea will be there. One thing is very clear that now this era of globalization, this bilateral, multilateral things, etc., all these things are going for a toss. So you have to think inwards. So if you are in your portfolio, what you have to do is do a thorough analysis, check what is domestic oriented, and try to be more on the domestic oriented stocks.
But would you still say that India is in a better position given the fact that a lot of other nations have seen higher tariff being imposed, for instance, China, even Vietnam for that matter? Are there any sectors that would stand to benefit from that, particularly textiles? Your thoughts?
Very frankly, this is too early to say. No? One day you will feel that we are in a better shape. Another day somebody else will feel he's in the better shape. I remember 3 days back, everybody was rejoicing pharma is left out, and therefore pharma is the best place to hide. In next day, one tweet changed the entire thing. Right. So it is very difficult right now to take any kind of decision. Who is in a better shape? Who will win this entire thing? Who will be the one who will be standing out? Because this is changing so fast. No, so you have to wait. You have to give this time. You don't know how people will react. Some countries will say we will react with the retaliatory tariff. Somebody will say I will retaliate with the currency war. Somebody will say I will succumb to it.
Right.
So we don't know what is going to happen. So it is not in a very prudent thing to do. You have to take immediate action. Don't do anything. Sometimes not doing anything is also a very good thing. No? So as of now, you have to just understand what is there in your portfolio. What is going to happen to these stocks? Again, don't have to take any action. No? Because in panic, if you take action, chances are that it will be a wrong action. No? So you don't have to do anything. Just be aware what is happening in your portfolio. What are the stocks that you are holding? Are they impacted by what is happening around the world about these tariffs? Now, for example, if you have a portfolio which has 80-90% of the stocks which are small cap companies, mid cap companies, which are domestic oriented companies, where indirect impact of tariff will be there, but there is no direct one-on-one relation. No? So then those kind of things might recover faster. So you just have to wait for some time and just be cool at this time. It is not necessary that you have to take an action immediately.
Okay, no time to panic. Try and be cool and take stock of your portfolio as well. But if somebody had to cut losses or look at capital protection and take refuge in domestic oriented themes, anything that is worth rotating into right now at this current juncture?
See, once the market has corrected so much, good stocks have also come down by 15-20%, 30%. No? Till 1 month back, 15 days back, we were all cribbing that valuations are not in our favor. Now everything is in your favor. So you just have to think about what are you going to buy, and what you are buying today is not going, you are buying for next 1 week, 15 days, 1 month. If you are buying it with a view of 2 years, 1 year, 3 years, that time period, then only you are buying. No? And then most of the things, even frontline stocks, a lot of them have corrected a lot. I don't think there is too much of impact of tariff on many of these stocks. So you have to, again, as I said, go stock specific. This year, not now after tariff, in fact, since January, we have been saying that 2025 calendar year will be an year of stock selection. That theme based, that sector thing will probably not work. because one, that most of the sectors have already been explored. There have been a lot of valuations, frauds have been built in many sectors. So you won't get a sector view. There will be a lot of dispersion within the sector. So you have to look at company specific. And India has normally been a stock picker's paradise. No? You have to find a good stock within the same sector. Say one stock can do something totally different, something much better than another stock. So you have to be again a very stock specific and stock picking guy.
Okay. What about the chances of a U.S. recession and the impact on IT stocks? Of course, most of the brokerage houses or some of the brokerage houses have said that there is now a 60% chance of the U.S. falling into recession as a result of what's happening with respect to tariffs. That happens, IT stocks, they were banking on a recovery in discretionary demand. That gets pushed out. So would your view on IT change in any way?
I think IT will remain under pressure for quite some time. We have not been holding any IT stock in our portfolio for almost a year now. And we don't think that there is going to be any change in that in near future. At least 1 year, we are not looking at anything in IT. We understand, yes, that whether recession or no recession, but definitely the growth slowdown will be there. No, and this will not be only for US; it will be actually throughout the world. We are expecting, because of all this tariff, when you see what happens is when this kind of uncertainty will come, obviously many decision making will get deferred. Many people, supply chains will change. Some things will. Now, this is an irreversible action. If you talk, I was reading somebody's very nice article on this, what Trump has done. Even if he were if imaginary, if we think that he were to revoke everything tomorrow, just say, okay, we are back to what American tariff was 1 week back or 2 week back. How will it impact? It has done the lasting damage of credibility. No? So now many people will start rethinking about their plans of growth, about what they were going to invest for, some customer in mind of US, some customer in mind where they were thinking about Europe or anything. So it will be now a very different world. And we will see that happening in next 3-6 months when people will be redrawing their plans. Therefore, now we are expecting that at least this year, say CY25, growth is definitely going to take a beating. And recession or no recession, that is a technical term, but definitely growth will be slower. In a slowing growth economy, obviously IT will not have that kind of performance, and therefore we will avoid it.
Okay, avoid IT. But what do you do with banks now? This is one sector that managed to outperform last week. And of course, we have an RBI policy outcome as well slated for Wednesday. Chances are that there could be another 25 basis point rate cut. While that could pressure margins, but credit growth is expected to pick up, pretty strongly, right? So in that sense, would banks be one pocket to hide, especially private banks?
Relatively better pocket, but don't expect a very big returns from BFSI sector as such. We are again, as a disclosure in our portfolio, we are holding only one power finance company and a housing finance company, not any other private bank or any public sector bank. We believe, of course, this rate cut cycle has started. Probably we'll see day after tomorrow some one rate cut, and then this ease of things happening, which will be some aid to the banking sector. But we ultimately see banking is dependent on the macroeconomic growth, on the credit, as you yourself mentioned, credit pickup. Now, credit pickup and the cost of funds. Key two things. Now, on the cost of funds deposit side, we are still seeing that there is no let up. The cost is going up only. On the credit growth side, there is not capex coming. Corporate capex is still not there. Government capex has been alluded last 1 year, it wasn't that much. So if that comes back, how much it will come back? And in this entire uncertain scenario, when government is preoccupied with what is going to happen with the globe, how we are going to deal with them, I think the preference to the capex, etc., will also go it will take a backseat probably. Very natural thing. People are occupied there, so once they first preference will be towards that side. So again, growth might be little subdued. So we are not expecting any big sparkles from BFSI sector. I think it will be still another couple of quarters away.
Sure. Lastly, global investors, of course, rush to safety of gold in such times, right? But now the precious metal has been soaring. We've seen gold hit record highs as well, although on Friday, since everything was selling off, we saw some bit of easing. But here on, do you think gold is also poised for a correction? Your thoughts? And should one really look at, getting into gold? If yes, how could they do that? Because even that has got very expensive already.
See, although in my view is that gold will remain positive for some time, but it is also prone to correction. No? See, first one is that it's a natural correction because last 3 years gold has given you fantastic returns. No? We have seen a one-way rally in gold for last almost a year now. So obviously, it's a natural thing that there will be correction that can happen. And now there are a lot of rumors, a lot of technical reasons which are coming in because of people getting positioned into one side of the things. So then that technical positions also create that. Good part is that fundamentally to say that in the longer term, I don't think there is too much of anything bad or anything negative about gold. It might see 10, 15, 20% kind of correction because it has already moved so much. So that correction will probably be a good opportunity to invest. There is no hurry to buy now. 6-7% is nothing. Probably it can go 15-20%. That time one can buy something, and gold is always only a 5-10% of your total portfolio. So it cannot replace equity or any other asset class, right? It's a complementary.
Sure. Okay. Point taken, Daljit. But since we are at the threshold of the fourth quarter earnings season, and that would be another domestic trigger to watch out for. Overall, what's your sense? How will the fourth quarter pan out? Would it be slightly better than third quarter, or do you expect it to be same, if not better?
No, we are expecting building in that quarter 4 will be slightly better than quarter 3. Quarter 3 was better than quarter 2, and of course quarter 4 is slightly better than quarter 3. In any case, historically also, if you see, India's H2 is always better than H1, and quarter 4 is mostly heavy. Most of the companies have better quarter in the last fourth quarter every year. So this is one historical phenomenon. Plus this time also, the last 2-3 quarters were not so great, so it will be relatively better. Full year, we are for FY25. We are not expecting very big growth. We are expecting full year will end probably for Nifty kind of thing 8-9% ballpark number, and then FY26 we expect as of now. Now, of course, what will happen to tariffs and how things will change, but probably FY26 till now we were expecting around 12% kind of growth. So I think as of now we are not changing that view, but it will depend on how things move out.
Sure. Point taken, Daljit. With that, would like to thank you. I'm afraid we are running out of time. This conversation could go on and on because there's so much to talk about. But I'll call it a day today, and I look forward to connecting again once there are more updates and when we have earnings as well. But I would like to thank you for taking out time. Always a pleasure to get in your perspective, and I wish you a very happy trading day going forward.
Thank you. Thank you very much.
Well, on that note, let's take a look at the market. Of course, intraday, this has been the biggest fall on the index since 4th of June. Right now, we are still clutching on to that 22,000 mark, 880 point down on the Nifty, 2,700 point down on the Sensex. The mid-cap index down 4.5%, sectorally, of course, all the sectors are trading deep in the red. But I think it was a metal pack, IT metals, these were some of the pockets that were bearing the brunt of today's sell-off. The metal index was down 9% at open, but right now I think the metal pack is down somewhere around 7%. IT 5.5%, you have auto 5%. banks 3%, realty 5.5%, and on the Nifty 500 when the market opened, I was struggling to look for gainers, and I was thinking that perhaps there's something wrong with my screen, but there are just about 2 odd gainers on the Nifty 500 index today. That's the kind of that's the extent of the sell-off in the market today. And even when it comes to Nifty, you have stocks like Trent, Tata Steel, Tata Motors, all these stocks are down anywhere between 10 to 17%. Trent is the big laggard, then 18% down as we speak. Tata Motors stopping shipment, JLR shipment to US for a month. That stock is down 11%. Tata Steel 10%, HCL Tech 7%. It's just a bloodbath, so to say. And now, as we speak, the Nifty has also slipped below that 22,000 mark once again, waiting for some positive headlines to come out of US on the tariff front. Perhaps that would be a trigger for some bit of a turnaround, but for now looks like we are in for a Black Monday 2.0 on Wall Street as well, because US futures were also down anywhere between 2 to 4% a piece this morning. But with that, we leave you. Thanks a lot for tuning into Opening Bell. Marathon 1 hour show. It warranted the kind of texture that's there in the market. But I'll see you again at 3:30 p.m. Hope things will be a little better than what than where things are right now. See you at 3:30 then with me and Yatin. Don't forget to tune in for Closing Bell. For now, have a good day and stay tuned to Money Control for all your other news and updates.